So when researchers recently gave professional traders advanced knowledge in what they call the crystal ball challenge, you'd think with that information they'd significantly outperform the markets. Think again. Hi, my name is Paul Carroll. I'm the CEO and founder of Avion Wealth, an elite wealth management firm here in Texas. So this was a great experiment. I thought it's very relevant for a short video. The experimenters gave the traders advanced knowledge of a move. A good example would be the recent interest rate cut. They gave them advanced knowledge of what the move was, but they didn't tell them how significant the move would be. Again, in this case, would it be a quarter-point move or a half-point move? And despite the advanced knowledge, the best traders got their bets right just 63% of the time, and they were the top tier investors. The vast majority actually took pretty bad hits on their investments. This is very important, and leads to some pretty interesting insights that I always try to make sure my clients understand. The experiment was inspired by Nicholas Taleb. If anyone's heard the term black swan, he was the guy who coined it. He wrote the famous book, Black Swan, The Impact of Highly Improbable Events. Fascinating book, great read, one of the best financial writers of the 21st century. What do we get from this information? What we get from this test is knowledge of just how efficient markets really are. Even when we know what's going to happen, not knowing how much of that is not enough. Even in the most recent interest rate cut, we had traders betting 0, quarter, half percentage point. It surprised a lot of people as a half point. The only people who got this right were the ones that went all the way in this case. The markets predict the weighted average of the knowledge of market participants. We call it the wisdom of crowds. And in many respects, the wisdom of crowds is usually correct. But far more important is the wisdom of the crowd tends to be the best bet out there. And if you bet against that wisdom, you will, as a general rule, lose. What does this mean for stock investors? We have this desire in us to look back at moves and go, see, I saw that coming. I knew what was going to happen. I didn't make the trade. I would have made money. It wasn't enough, however, to see it coming. You needed to see the extent. Markets are remarkably efficient. They don't have to be right to be efficient. All that efficient means is, given the information available, consistently beating the markets is next to impossible. It doesn't mean that the price is right. It is a misunderstanding that a lot of investors have. This is why we recommend people put together asset allocation models that reflect the different returns projected for the different asset classes and take into account the risk tolerance of the investor. We're not trying to time the markets. If you have any questions about this or anything else related, please give me a call. We wish you the best of investment success. Thank you.